Good morning, traders. Richard here doing a quick point and figure chart review of the S&P 500 index. I've got the 50 by 3 box size and the reversal size up here, which means that a 150 point move to either direction will change the trend. So if we get a 150 point drop to the downside here and we get an O printed there, that means this rally is over. But so far, very strong rally. We've had a very strong rally, rebounded from a point and figure chart trend line support zone here. This rally started in back here in February 2024. March, very strong rally, bit of a period of consolidation, strong pullback there, and then another strong rally rebounding from this trend line support zone. And then when we got past this high there at 4550, it activated the 4800 target as well as the 4850 target, which was activated when we made this reversal here. Now we're getting quite extended. We took out 4850, 49 and 5000 and the 550 target. We'll cut small points away from the 5050. There's another target 5-1 and then 5-4 and 6-1, but these are quite far away, so we do expect some form of a retracement of this move. Now if we look at the Fibonacci extension here, this entire move, when we got this pullback, we projected the move up, and this 550 is or 5050 is a 150 point 50% move higher basically. So it's a 1.5 move. There is still potential for a 5-153 move, but do expect some form of a consolidation view of the seasonality in the market going into deeper into the Q1 period. Now that's the 50 by 3. If we're going to look at a logarithmic point of figure chart, you can see we took out 4, 9 and 5000, yeah, and then the next one is 5101, but do expect some form of a consolidation. This market is now very extended, this rally. Do expect some form of a retracement back to key support zones. Just to look at those key support levels back on here, if we get a reversal, a point of figure chart reversal to the downside, the first target would be this 4850 zone, and then the next target would be this 4700. So these are the downside risk targets on that particular point and figure chart. Taking it one step further, looking at the Ichimoku clouds, very strong move there. This entire bull market started back here in October of 2022. A very strong move there. And now we're getting to the upper end of this kind of trend there. If we look at these highs there, we're getting to that upper end. So market's a little bit extended from the top end of the cloud here. I've got the daily Ichimoku cloud up here. So you can see a little bit extended from the top end of the cloud. We're also battling front end cloud chart, resistance zone. So we do need to see some form of a pullback and maybe a consolidation back down to retest this 4.9 and this bottom end cloud chart level there at 4858, as well as 4790, 4780 basically there. These are the downside risk targets. So we do need to see some form of a consolidation of this move. It's been a very strong move since the reversal back here in October of last year. So a very strong move, a little bit extended from the top end of the cloud and navigating front cloud resistance there. So that's a critical thing to keep in mind. Looking at the weekly, you can also see this front cloud resistance there at what's that, 5030, 5021, basically 5034 there. That's the front cloud resistance zone. Getting back to this trend line resistance zone there, will be interesting to see if we're going to get that line tested, but there's downside consolidation risk. We can see this move as an upward continuation pattern, so we can see it snap back down to this support zone of 4750 on the weekly Ichimoku cloud, with front end cloud here as a major support zone for the quarter. Next couple of quarters, 4568, 4570 basically. So watch out, we do need to see some form of consolidation of this move. We're a little bit extended from the top end of the cloud. We're looking at the price action where we are now in the top end of the cloud here, as well as this front cloud resistance zone. Also be completing an upward continuation pattern here. So the market's ripe for a bit of a consolidation. And if we're going to look at that from, let me see, where's my seasonality chart? Give me a second here. Average Here we go. This is the 40-year average annual seasonality chart. You can see the kind of a trend over the years, and that's the 20-year average. 20-year average annual seasonality chart. So far we've just been following somewhat the loosely the seasonal trend. Very strong move we've had in view of the corporate earnings and the artificial intelligence driving things, but be aware that we are going into a seasonal weak period in the market. And if we look at this chart, we can see that we're going to expect some form of a consolidation into if I combine the 40 average annual seasonality in the chart, you can see that February, more or less this week, is normally a week where we see a little bit of a pullback in the market, and we can see that down to a beginning of March low there, even the 21st of March. So we could see a little bit of a 1 or 2 weeks of a consolidation back down to retest these level there at 4750, and then a continuation of that move. Is also by that point in time we've had a 38% Fibonacci retracement of that move. Let me just see there. Yeah, so 23% retracement and a 38% retracement will bring us to that this kind of zone. It used to be resistance, and that can now come in back in play to be support. But for this week, watching very closely if we're going to get our reversal on the point and figure chart, and that will be the trigger point to signal that this current rally is over, and we back down to consolidating to Fibonacci levels, and then the rally to continue, since we still got a very strong uptrend on a point and figure chart basis. Until next time, happy point and figure chart trading. Bye for now.